Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 98, NASDAQ down 7, S&Ps are up 9, gold contract down $5.60, traded at $1,174 an ounce. Silver up a penny at $15.70 an ounce. Platinum up $8 at $1,190 an ounce. Copper flat at $2.89 a pound. Light sweet crude up $2, trading at $57.31 a barrel. Bonds, we have the 10-year down 23 ticks at 125.31. That's a lot, big time. 30-year down almost 2 points at 142.26. We'll take a look at the volume. I suspect we're going to have, in fact, we'll do that first. Let's go take a look at USH5. And they're getting the price destruction going, no doubt, but guess what? There's no juice. Pretty amazing. That's typical holiday trading. You got to love it. So you got 146,000 contracts in the bonds, folks, and you're going into 441,000. Bonds are going higher. Got to love this market. King dollar up 356 ticks, trading out at 90.30. Now, King dollar also is up. Light volume, and the thing that's amazing, and well, what you have here is this. King dollar is going after its 2005 swing high, a continuous contract that's 92.50, but guess what? That is not smoking the metals market, which is impressive in itself for the metals market. Euro is down 54, trading out at 121.76, and the yen is up 6.9 at 120.74. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You're over the highs. We're at 2086. And, of course, you got holiday trading happening right now. We're going to come in with about 650 million shares, 700 million shares on the NYSE. We take a look at the SPY. The SPY right now is doing 179 million shares. She's over the highs, though. She's at 208.12. Well, 208.42 is the high, actually. So she's still making her way up to those highs. NASDAQ Composite almost got to the high, just couldn't handle it. And what that's all about, that's about the biotech index. They're taking that apart today, folks. So, NASDAQ Composite, the high, 48.10. We get to 47.98. And just can't handle it up there. So, in that context, what I expect, the composite itself, excuse me, let's go to the NDX 100 next. We take a look at the NDX 100. NDX 100 also got over the highs the last 4 days. Under them right now, 21 million shares. There's no buyers in that NDX 100. The biotechs, you want to take a look at something that's getting toasted and roasted. These biotechs are getting hit hard. If we go to the IBB, it's down $13 right now. You come off the high, and you come off with some volume. We made a high 2 days ago with 2 million shares. You're down with 2.9 million right now. It's taken out the swing point. That's going to stop making its way down to the February 15th swing point of 247, and right now you're at 295. These things have a long way to go down. It's pretty intense. Gilead in 3 days has gone from a price of 109 to 89. You know, that's $20 with volume. We pull this back a little. We put this on a monthly basis, and what you have, you know, this has been a parabolic move. Your first stop on Gilead, I expect, is going to be 78.66. Now, we are coming into that with volume. If you come into it, if this comes into it like it's blasting right now, then get out of the way, man, because it's going to be big trouble. Celgene, CELG, that baby is moving south today in a big way also. That's down 6%. That's down 685 with volume behind the move, monster volume. We did 15 million. They're all trying to get out the door at the same time, and they just can't get out, folks. Celgene right now is at 106.65, and we take a look at Celgene. So let's see. Celgene has 74 on her. Basically, 74 looks like is what it wants to go to. We take a look at what is it? Oh, it's Biogen. Biogen's getting hit too. Now, Biogen is the largest weighting structure inside the biotechs. Well, inside the NASDAQ Biotech Index. That's down $17, 2 million shares. Bottom line is that you get lower prices coming at you inside that, which will affect the NDX 100. In fact, if we look at the NDX 100 right now, they're all, you got Celgene down. Now, these are the ones taking points away from the NDX 100. You have Celgene down $6.84 at 106. Alexa Pharmaceutical is down $9.82 at 178. Biogen's down 17 at 334. And Regeneron is down 17 at 395. Putting juice into it is that you have Express Scripts is up 343. Wynn Resorts is up 491. Vipple Communications is up 13 cents. And Tractor Supply is up $1.70. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
Doing just great, Tom. How about you?
I'm doing great, man. Thanks for calling. Thanks for holding.
I just wanted to start by saying to you and your family, and obviously everybody out in the audience, all the hosts, everybody have a Merry Christmas, Happy New Year.
And to you also, man.
I just want to wish everybody the best going into 2015.
That's right. It's going to be a great 2015, no doubt.
Absolutely. Anytime we're on TFNN and just dealing with you guys, it's going to be a great year, I'm sure.
You crack me up, man. I love that. Seriously, man.
I had a couple of stocks that I bought at the low, and I actually don't have a ton of time to stay on the line. If you wouldn't mind, just I can listen to it off the air.
Yeah.
But they're VALE.
Oh, interesting.
And then also Continental Resources, CLR.
Okay.
And they both kind of, I thought, completed some pretty major patterns down there at the lows. So I'd love to hear your take on it. And
okay.
Again, just have yourself a wonderful Christmas, great New Year, and thanks for everything you do. I really do appreciate it.
Well, we appreciate you growling and prowling with us out here, Brent.
You take care, Tom.
Okay, man.
And again, I'll
Merry
talk
Christmas.
to you next year.
Okay, cool.
Take care. All right.
And let's go through this. Folks, Valley, V-A-L-E, happens to be in the gold report. The way this came in the gold report, it came in the gold report years ago because what happened is that where a couple of these big shows, I saw this iron ore man really moving. So, we've traded it for quite a while. Now, we haven't owned it because it's gone down for so long, but when I was doing the gold report today, and the gold report is out, if you got it, you know what I said about it in there. It looks like this has made a nice bottom. And this is an equity that absolutely got destroyed. There's no two ways about it. I mean, this equity, in 2007, it was $42. It goes down to $8.50. Does the counter trend bounce to 36? And this is a classic. Now, these are the high volume lows that it's like it seemed that they never could get tested, and they said they got tested. Now, this one here, what it did is that it tested on, last month it came down on 523 million, and it's going into 1.5 billion. This month, thus far, it's done 598 million. So we didn't buy it. That's the first part. But it has a nice sign of strength. Now, what I'm waiting for is that I want to see it get back inside this 856 area. That's what I want to see. 856. You get back inside 856, it's going to get some real action. But it certainly, as Brent said, it certainly has got a sign of strength. And there's one of the signs of strength are real subtle. And see, in the marketplace, a subtle sign of strength or weakness is really something cool to pick up on. And what it was is that right after it made a bottom, so it made a bottom on a daily with 35 million shares. 2 days later, it didn't have much movement, but it went from 713 to 740, closed at 725, but it had 51 million shares. Well, 2 days later, it's at 820, because that was someone accumulating stock in a big way. Then, monster sign of strength on option expiration. That baby is on its way up to this 955. Now, let's go to, as soon as we come back, we'll go to CLR. That's Continental Resources. This is a big, I think it's oil and gas. Looks like maybe it's just oil. But we'll get our head wrapped around that. This is Tom O'Brien. This is TFNN. You stay right there, folks. So come right back. Dow Industrials up 94. Nasdaq's down 7. S&Ps are up 8.5. Gold's down 560. We'll be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials up 95, Nasdaq's down 9, S&Ps are up 8.5, and as we do each and every, what the heck day is it? It's Tuesday. It's a beautiful thing. Each and every Tuesday at 20 past the first hour, we get our man, Mr. Basil Chapman. Don't forget, Basil has an outstanding program right here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, the opening call. The way you can get that, test drive it 30 days absolutely free, is go to TFNN, go to newsletters, go to trading newsletters, you see the opening call right there. You can test drive it right here, right now. Basil Chapman, what's going on?
Merry Christmas and the best of everything to TFNN staff and to you and the family and to the whole TFNN family, Tom.
And you also, and happy Hanukkah. So when is Hanukkah?
It's just about wrapping up. Very close.
Oh, I'm sorry, man.
That's fine. It goes for 10 days.
That's good.
I'm not very good at keeping track, but yes.
That's awesome, man. That's so cool.
Yes.
Well, first, is it warm in Boston right now?
Well, actually, I'm in New York, so it's not too bad. A little drizzly, but not too bad.
Now,
we haven't had snow in Boston. It's just amazing, yeah.
Well, it's global warming, man.
I guess that's what it is. I'm not going to complain. Yeah.
Hey, so how old's your grandson now?
He will be next week. He'll be 6, and the other one's 7.
That's crazy.
Yeah,
man.
Isn't that time flies? Is that amazing?
Yeah, that is amazing, man.
I don't know if you said what days, and I feel this. I have none of the clue. It's just
well, you know what it is because it's a vacation week. Everyone's hustling around here. It's like, man, the time just flies, and I'm trying to figure out. Like, I mean, yeah, that's that's where my head's at right now, unfortunately.
You're right.
So, what are we looking at, Basil?
As usual, I'm showing you the Dow. When we spoke last, I think it was Tuesday, and what we were looking at was market was dropping sharply, and basically what happened was we flipped from the short side very quickly to the long side. And let me show you something interesting. The chart pattern I'm looking at right now, this is the Dow chart that I show my subscribers to my opening call every single day, and we discuss it in terms of patterns that I look at, Chapman wave proprietary patterns, and also just the waveform itself. And I said to you, I believe that we had made a peak G, a very unusual G, back at 17,991, beginning of December, and that we're watching to see how deep this decline goes. And what happened was we flipped around, and there's a pattern that I call, it's like a descending cone. I call it a falling axe formation. And the moment we broke above it, that was really very important, because what it said was that there was a chance we would match some of the, you could see, I'm not going to move it too much, but the left side here, you see all these beautiful white candles here with the little tiny dojis. Those are up sessions. Well, what I'd said is if we're going to match, then we shouldn't have any sharp down day. And what happened is we quickly went to the long side, and we grabbed some long positions. And look at this. Out of the moves that we've had from the low that was made at 17,067 just 5-6 sessions ago, we've not had a down session yet. And the only slightly a shallow day was that doji candle that was made on the 19th. So what we're looking at is the 19th, yes. So what we're looking at this particular point is that we've broken to all-time highs. I have no choice. I've this backwards and forwards in the Chapman wave. This is leg A. That's the only way I can count it. But I'm going to show you something really interesting, and that is the 9-period moving average is way down here at 17,723, and we are trading right now at 18,037. What I said, you remember when I spoke to you, I said my contention was that 18,000 would be both a physical and a psychological barrier.
Yes.
That we would have to pull back. Now we've done that, and when I said to subscribers in this morning's update, I said, what we're looking at here is that 18,000 is no more a resistance we should go through. Whether we close above it or not is going to be very important. But the fact is that we should pierce it, and today so far the high is 18,069. So the long positions that we've got are very interesting. We went long Athena Healthcare at 134.49 on the 18th, and this is what, just a few days later, and it's at 150.55 right now.
Nice.
It broke out. It is in leg D in the daily, but this is a very powerful move, and I believe it's only leg B in the weekly chart. Monthly chart has a lot of catching up to do. And right here in the corner, you can see it's in leg E in the 120-minute chart. So I'm expecting this 11% quick gain. We should have some kind of a pullback. Then there's another one that I've spoken to you about. Forever we've been in it, had huge gains, and then we were out of it when it made its top, and we went back in just recently at $5.58. That is RAD. RAD is the symbol. It's in leg D now. It's trading at a 7.42, and that is about a 33% gain. it went. This is the chart pattern that subscribers are following. It's this cup formation, and I'd already drawn in what I call the Chapman Wave inside wedge target price. So it's already gone to the first big target price of right here at $7.43. Today's high is $7.45, and here is the 120-minute chart, which says it's getting a little bit overbought. Another one that we bought, and this is one that we had avoided for so long, and it was a shock to me to find that it was giving a buy signal, but in fact it's one of the dry shippers. It's called Dry Ships, DRYS. We got in at 0.94. It actually hit $1.36 this morning, and this is just from the 19th, and we took some profits, and we've still got a core position that's trading at $1.20. So it was up about 44% early in the day. Now it's up about 24%. But what's really interesting is that if the shippers have come alive, that is very significant, because it is talking about a part of the economy that has really been dormant for quite a while. I'm not sure just exactly where I need to look at to see what exactly is being shipped, but the fact that the shippers are actually moving very well. One we wanted to get, and then I took it off the list because it wasn't acting well, and then it just spiraled higher, was NATs, Nordic tankers. So I thought that this is another one in the group. It's very low price. It's worth taking a chance, and so far that chance has worked out. But actually, NAT is one of the better ones in the group. This is really a catch-up stock, but on a percentage basis, it's done very well. So this is a fascinating period, because I spoke to you the last time that we were on that I thought the biotechs were getting kind of toppy, and that if there was a rotation going on, we should see other areas. Some of the cyclicals might start to move as we see the biotechs start to pull back, and I think that's kind of what we're looking at here, that the biotechs, this is the period where they start to rest, and maybe we're looking at some of the autos, some of the cyclicals doing nicely here in certain niche areas, and if those dry ships are starting to move, that's a good sign. So I'm kind of positive. I was surprised because in the weekly chart, I really can't. There's no other count that I can have that this is leg B in the weekly chart. If that's the case, it says that we shall still go to higher highs of leg C and then leg D in January. So far, I have to be quite positive on this market.
And listen, folks, you can get Basil's newsletter by coming over to our website at TFNN.com. You go to newsletters, go to trading newsletters. You'll see the opening call right there. Grab it. Basil, thank you so much, man. Have a great rest of Hanukkah, a safe holiday, of course, and a Happy New Year, brother.
And same to you, Tom. Have a wonderful, and thanks for all that you do for TFNN.
Thank you, man. Appreciate it. Stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Dow Industrials right now are up 75. Nasdaq's down 14. S&Ps are up 6. And it's going to be intriguing watching just coming into this closeout here. Because what you do have is that, you know, it's subtle, but the Dow, no doubt, you know, got the number. Bottom line, 30 stocks, big deal. But the S&Ps, they're struggling here to stay up into higher price. I suspect they're going to be able to stay into higher price because they're only going to have to keep them up for about, what, another half hour? 25 minutes. NASDAQ, different ball game, though. And if you do remember back in 2000, folks, what we did have is this, and this is important in the context of where we are right now, is that the NASDAQ had actually topped out, I believe, January 14th. And then it was the S&Ps and the Dow that got taken apart in March, like March 20th. And that, you know, what was really crazy about that is that if you actually look, here, let's do it right now. Because if you look in 2007, they were around the same numbers also, which was really weird. But I remember coming up to 2007, keeping my eye on that, because it's like, man, that is weird that that's how that was shaken out. If I take this back, it's going to be a little bit harder because I got to, yeah, if I take the S&Ps, yeah, so it was. The S&Ps were March. I think it was March 20th to be exact. So that was in 2000. And then in 07, the first peak was July, and the peak was October. So that's your S&Ps. And we go over to the NASDAQ, and we take a look at the composite first. What we had with the composite. Okay, so the composite. No, the composite was March too. No, the composite was March. Let me get the Dow Industrials then. It must have been the Dow. The Dow must have been January 3rd. That's weird. Because see, January 3rd of 2000, it was vicious. Yeah, it was. Interesting. That's just the opposite then. So it was the Dow Industrials. The Dow is the one that fell apart first. Interesting. Yeah. We'll see where this baby does shake out. 877-927-6648. We take a look at a few gold stocks. Now, let me show you one gold stock that, has a great name, but man, this thing's better snap out of it quick, and it's Gold Corp. Gold Corp hasn't been able to get any traction. So we have a little divergence inside the gold market right now. Gold Corp is trading at 1720, and 1701 wants to get hit. And what the difference is that Gold Corp didn't have any nice big signs of strength when it went from 17 up to 21 on that bounce. If we take this and we put it on a much longer term basis, it looks like Gold Corp is really going to go after that swing low of 1384. So that's pretty intense. Now, in that correlation, we go over to an Eagle. We take a look at an Eagle, different ballgame. Still at lows, no doubt, okay? But what you've had with an Eagle is you've had a few different signs of strength when it went from the 2220 level all the way up to the 27 level. And that makes a big difference. And let's go Rheingold Resources. We take a look at Rheingold. Rheingold Resources also has had those signs of strength after making that bottom. Many of them, and it looks with what you do have happening in this gold market right now is that there's a few of the gold equities that are actually leading the metal, and leading the metal by a good amount also. If we take a look at the metal, we go to the metal for a second. What you have with the metal, is laying out there at 1175. Volume today is really light, 90,000 contracts versus 343,000. Yeah, 342,000. So it's a good number. That's a really good number. Now, we got to go to bonds because they're smoking the bond market. Okay, TYH. Now, this is what it's important to understand, folks, on holiday weeks. You get fast price destruction with no volume. That's something that's going up, not down. Bond market today, 10-year, you get 500,000 contracts traded. You're going into 1.6 million traded. Bottom line, yeah, they're taking it lower, and I suspect the word 126.01, they'll take it to 126, 125.17. Yeah, they can get it down there. The 30-year, they're really taking the 30-year to the cleanest. It's almost down 2 full points, but no juice. 159,000 contracts, and that correlation is coming into 441,000. That's not the way things go down or stay down. What I don't know is that on Friday, or more than likely, what's going on? The bond trade's got it made. More than likely, the bond market is closed tomorrow. Our markets close at 1 o'clock tomorrow. We will be opened on Friday, though, and we will be programming on Friday. So, we'll see what kind of a market we have going there. The IBB, and this can, what this can be. There's no doubt. This can be just everyone has large winning positions. They want to get out of the door. It's been overextended in a dramatic way. There's no two ways about that. Gilead started the downdraft, but what does happen with all these biotechs? They trade together, man. And when they get, when they go out the door, There's no mercy. There's the doors are always small in the biotech industry, and so the volatility is vicious. If we look at the IBB, we're at 295. The first stop is going to be 245. And 245 is nothing, folks, okay? We were at 207 in April, and this is something that, has gone from $83 straight up, just about straight up. You only had one big correction. In February of this year, 2014, you went from 275 to 207 in 3 weeks. That is taking some heat. What was interesting here this morning is that it's always, what I find is that you can learn more from what analysts don't say versus what they say, particularly when they're analyzing what is going on in a particular market. And this is what I'm talking about here. CNBC today was talking about the Dow Industrials, and they were talking about equities that were not up in the Dow Industrials versus where the Dow was, meaning the Dow was at new highs. And, one of the first ones that came to my mind, I was saying to myself, it'd be interesting to see exactly how far IBM is down. And what they had brought up is that they brought up that Visa was the big mover for the year on the way up. Exxon, was down something like 7%. And they skirted over the IBM issue. And what they said is, it was really funny, because they said, well, the dogs of the Dow, and what the dogs of the Dow would be, folks, at the end of the year, there's many people that will buy the dogs of the Dow thinking that they're going to go up the next year. But the bottom line is that, IBM topped out at 210, but from the beginning of the year, IBM is down $25. It was 187 at the beginning of the year. It's 162 right now. Now, what can you glean out of that? What I glean out of that is you don't have clean information, and why don't you? You don't, because the pump is on a continual basis, and it's really important for everyone to understand that. It's important to understand that what type of information you're getting, if in fact when it's something that's that factual, well, lay it out. Because if you're not laying it out, what does that mean? That means that the pump is on the other side and the prejudice is on the other side. That's crucial to really get your head wrapped around. Why? Because then you'll see how markets themselves behave. The behavior in markets on a continual basis go like this. The markets are set up to push paper out. The bureaucracy is set up to push paper out on a continual basis no matter what happens. And I'll give you, for instance, we all worry about high medical costs, right? You get basically hypocrisy all over the place, people saying that they care about it and they worry about it and all that. Let me tell you something. Medical companies, lawyers, bureaucracies, none of them care about it. They're all in on it, folks. That's how this works. Because of the fact that the higher price that is out there, the more that the attorneys get, and you hear this argument all the time that they're saying, oh, the attorneys are suing everyone, we got to get rid of the attorneys. They're saying that just in the aspect that that's what they have to say. They don't have to say it, but that's what they do. The insurance companies couldn't stand it if they got rid of the insurance companies. the lawyers. Because then they'd have to bring down the prices. They love the idea that it's up, up, up. The whole thing is convoluted, but you can get, you want to wrap your head around that because it's bogus. That's the bottom line. But what you get out of that is that you understand the field that you're dealing in. And the field that you're dealing in, okay, is a corrupt field. The foundation is. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are up 81. NASDAQ is down 11. S&Ps are up 7. And if we take a look at the volume characteristics out here, what you're going to get is you're at, on the NYSE, we're at 479 million. And let's see. Well, it's going to be a tough one to get to 650. It'll probably get to 650. On the NASDAQ, we are at 1.3. So the NASDAQ will get to about 1.7. And the NASDAQ just missed its high. So the high on the NASDAQ is 48.10. We got to 47.98. Inside the NDX 100, what you have is that the high in the Index 100 is 43.47. We got to 43.09. And we'll see how this little baby wants to pull back. And it's going to, the biotechs, no doubt, will affect and do affect the NDX 100 as well as the NASDAQ composite. It affects them pretty quickly, actually. The biotech index, the IBB right now, you're down 13 bucks. You're at 295. You're coming into 292 swing. That 292 swing had 2 million. We're coming into that with 3.3. They're getting out that door fast and furious. Now, the October 15th swing point is 257. The high of that, 247 is the low. You can see this biotech's a trip, man. I mean, it's just amazing. When they come out the door, it's like done. You know, because I can make the other side of that and say, okay, in 18 hours, you just gave back till October 28th. I mean, that's how this trades. In fact, 6.5 hours. Because it gave back all of that. It's been going sideways for quite a bit. And that's distribution. That's distribution at highs. And, you know, if we take a look at the IBB, 235. 235 is where that little baby wants to run down to. We're going to take a look at Apple. Apple had been making new highs. Actually, let's look at Alibaba first. Alibaba, one of the lockups, BABA, just came undone today. And Alibaba down slightly, down 328. GPRO, I believe GoPro is that's unlocked today too. And see, it's unlocked and yet it's up. That's what you know. What's amazing, folks, okay, is that what I've found. You know, now GoPro is down big since the last 3 months. It's from 98 to 61. But the day of the lockup, it gets unlocked. It seems to go up a little. And that's today, I believe today. But what GoPro got to do, which is just amazing, is that they finagled a way to sell huge amounts of equities at the highs. You know, the CEO transferred some into a charity, turned around and said the charity needed money at this particular point, and that game there, you know, folks, has to do with, that is, first off, money that taxes we're going to be paid on. But more important, the charities themselves, you know, I suspect in this case, and is that's a power. That's a big power. It's you know, you have someone, you operate the charity, you put the money in the charity, and then you use the giving away of that money in the charity for more power. That's kind of how that thing shakes out. Like, it really drives me crazy when you're at grocery stores and, you know, the grocery store says, well, you want to donate here, you want to donate here. And then what they end up doing is that they donate to the whatever they're donating to, and they donate, like the grocery store is the one that donated the cash. And just by the way, that would be cash that goes in and goes back out, but you get the gist of it. It's pretty wild. 877-927-6648. Let's go through some of the high volume stocks in this low volume market. BAC is up by 21 cents. The big movers on the way down are the biotechs. You got Gilead down 294. Celgene's down 680. GoPro is up 350 right now. You got Chesapeake Energy up 179. Some of the Dow stocks, we go look at some of these Dow stocks. You have American Express is up 23. Boeing is up 179. CAT is up 113. In fact, let's go inside the Dow Industrials and see who is down. So who's getting hit out here today is Merck. Is one of the laggards. That's the biggest laggard inside the Dow Industrials. That's down $1.71. Johnson & Johnson is number 2. That's down $2.50. Pfizer is off 64. And J.P. Morgan Chase. I see they just changed it now. 3M. 3M is down 35. Putting juice into it on the way up is you got Chevron up 212, ExxonMobil's up 141, Coca-Cola is up 62, and DuPont is up 108. If we go over to Coca-Cola, we take a look at Coca-Cola up 63. That's not going anywhere. Coca-Cola's been in this consolidation for quite a while right now. And, yeah, so it's been in consolidation going back to April of 2013. Same place. Coca-Cola, yeah, exact same place. Percentage-wise, dividend-wise, Coke's paying a 2.8% dividend. If we go over to the oil sector, let's go to big ExxonMobil. So Exxon is going to the top of its range. Now, what Exxon has, Exxon's going to have 2 separate high-volume spikes at the lows. You're at 94, Exxon go to 97, that's the top of the range. We'll see what it ends up doing at that top of the range. It hasn't been able to get any juice, but right now, we'll see Exxon back down to 86. This is going to be interesting watching how this shakes out. Exxon has been hammering the bottom of its consolidation that has been out there since January of 2013. And the last 2 times we came down was pretty vicious. The first time was October 15th. You come down to $86, and you did 108 million shares on the weekly. Next time was December 12th. You did 99 million shares, and then the following you did 132 million shares. When we went up, you did 50 million, 67 million, and 47 million. This is a big problem. If I bring this back a little bit more, so that was on a 2-year. You take this, yeah, I see what's going on. You take this, boy, oh boy. This 2015 is going to be intriguing watching these oil stocks because ExxonMobil has a high volume low at $67. That's what Exxon is doing. Exxon, and you can see why it's holding at the $90 because we had traded sideways from August of 2012 to October of 2013, right at those levels. That's real support. That's just like building a house. That's good support. But the further you hammer that baby down, the more it opens a hole, and then see you later. See ya, don't want to be ya. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. Dow Industrials up 73, NASDAQ down 12, S&P's off 6.5, gold down $6, silver up 2 cents. You stay right there, folks. Come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Corby Yamada. Believe in the magic of tomorrow, and your spirits will be lifted on the wings of hope. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 64, NASDAQ down 15, S&P's up 5.5, gold contract down $4.60, trading at $1,175 an ounce. Silver up a penny at $15.70 an ounce. Platinum up 9 at $1,191 an ounce. Copper flat at $2.90 a pound. Light sweet crude up $1.69 at $56.95 a barrel. Bonds. Both bonds get smacked, folks. You have the 10-year down 22 ticks, 126 with light volume. 30-year off 1 point and 23 ticks at 142.28. Both with that also at light volume. King dollar up 406 ticks at 90.35. King dollar looks like it's going to go after its 2005 high. The euro down 59 at 121, and the yen up 68 at 120.74. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? 2086. That was the high out here. You got that high with 680 million. The last high was 2079. So you're 4 points above that high that was generated on December 5th. We take a look at the SPY. What you have with the SPY. SPY is at 207.75. She's right at the high also. She did 111 million shares out here today. Dow Industrials. So the S&P cash go to a new high. Dow Industrials at a new high. Dow hit 18,069. We're at 18,024. What put juice inside the Dow Industrials today was Chevron. That was up $1.92. Coca-Cola was up 62. DuPont was up 105. And Boeing was up 181. Those are the strongest Dow stocks. The weakest Dow stocks was Merck. That was down 175. Johnson & Johnson was off 246. Pfizer was down 64. And 3M was down 40. The NASDAQ Composite. Composite couldn't handle higher price out here today. Composite opened at 47.98, which was the high. Sold off from that high, not heavily, only out 15 points. The high that it was trying to basically get into and take out, folks, from November 28th was 48.10. We hit 47.98. The NDX 100, same setup inside the NDX 100. NDX 100 had opened at 43.08, went to 43.09, closed at 42.79, down 14 bucks. The high from November 28th in the NDX 100 was 43.47, and we made 43.09. Gave it up. What that was all about inside the NDX 100, folks, was the iShares or the biotech index. Biotech index was down $14 today at 294. Monster volume. They just couldn't. This door wasn't big enough. The biotech index had made a high 2 days ago at 319. Made that high in 2 million shares. We came down with 3.6 today. If we do go back into the NDX 100 and you see the type of damage that the biotechs can lay on a market, this is what you have. So what was bringing the NDX 100 higher today, even though it closed lower, was Express Scripts was up 353. Vipul Communications was up 14 cents. Wynn was up $4.20. And you had Mattel up 82 cents. Now, taking it south, all the four leading stocks taking it south, all biotechs. You had Celgene down $7.38 at 106. Alexa Pharmaceutical was down $9.28 at 178. Biogen was down $16 at 335. And REGN was down $18 at 394. Those biotechs have a lot further to go downtown. Gold contract. What do we have with gold? Gold gets pushed $4 or $5 lower. Dramatically lighter volume. We're talking about 91,000 contracts. That 91,000 is going into 342,000 contracts. Gold wants higher price. Bonds. Different take on bonds today. So, what you have with bonds, we had wide price spread with no volume. So you get fast price destruction without volume. That's saying bonds are going higher once again. You get, I really, I don't like trading light markets, but I like watching them because it tells you quite a bit about the market. And in the bond market today, it said it all. And what it said, you're down 22.6. You have 520,000 contracts traded. The 520 is going in against 1.6 million contracts in the 10-year. In the 30-year, what you have is that you have the 30-year coming in with 166,000 contracts. You're down almost 2 points, which is a big number. It's a huge number. There's no two ways about that. But you are coming into 500,000 contracts versus 166,000 contracts. There's no doubt they smoked it. That just means you're going to go right back topside, though. King Dollar. Let's go take a look at King Dollar. So what did King Dollar do out here today? If we go to the continuous contract, made a new high, and it's far enough away from the high of last week that the 2005 high more likely is going to get spiked. That 2005 high is 92.53. We hit 90.40 today. There's no reason it can't hit the next 2 days, actually. The highs that it already had taken out and had been trying to test it for about a good 7 months was the high of 2008, 9, and 10. As we get up to that level, the 92.52, that is 100% move also. So bottom line is that should be it with the dollar index. And when you do a straight line move like this also, that means the dollar is going to be tired. Is it? It's not really extended yet because you came up to the 2007-8. It's stalled enough there. Get by it. When we do look at this, though, it's dramatically lighter volume. And in that same context, what you don't have, and this is where the heads up, is that with the dollar higher, and today 400 ticks, folks, is big. With that higher, the gold contract did not get smoked on the way down. So that's telling me flat out that the dollar is still continuing topping out. There's non-believers out there that the dollar wants to go dramatically higher. But if you listen to all the analysts, they figure the dollar's going to go to the moon now. But that's the way markets go. And on the other side of that, the gold contract, if this was 2 months ago and the dollar had gone up 400, 500 ticks, folks, gold would be down $20, $30. That's the way that basically shakes out. If we go over, and silver didn't get hit, which is a trip in itself, because there's no doubt silver is so volatile and they can come out of anywhere to basically take silver apart. And it wasn't there. Silver is at 1560. I suspect what you have here is there's no more stops under this, 1550, 1560 area. The reason being is that they took them all out on December 1st. On December 1st, you remember the silver market went down to $14.10. It's a high volume spike on the way down. And I'd say it's all cleaned out there. It's cleaned out there. Guess what? Can't push it down. What are you going to do? You're going to push it higher. 877-927-6648. Let's do the small caps. We go over to the small caps. We take a look at the small caps. What we have inside the small caps is this. IWM today got to 120.44. The high that was out there was 120.97. The actual index also it didn't make the highs in the index, and the index is we hit today 1207. And the high in the small cap index is 1213. And so when you basically put this together, what I expect you're going to probably see out here tomorrow is this. We get a half day tomorrow. You get a full day on Friday. They'll keep the Dow. The Dow can hang up there until the first of the year. That's the way I'm looking at this. There's not going to be a huge amount of action out here tomorrow because you go from 9:30 to 1. On Friday, you have a full day. Monday's a full day. Tuesday and Wednesday of next week is a full day. So we'll see where that money is going from the IBB, or is that money just getting evaporated in thin air? There's quite a bit of money that got evaporated in thin air today when you do look at that IBB. This is Tom O'Brien. This is TFNN. Dow right now finished up 64. NASDAQ down 15. S&P's up 6.5. You stay right there, folks. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 64, NASDAQ down 15, S&Ps are up 6.5. And as we do each and every Tuesday, we got our man, Mr. Andy Hecht. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, as soon as I finish at 5 o'clock, Andy has an outstanding show, 5 to 6 Eastern Standard Time, every Tuesday, Thursday. He also has a great newsletter. It's the Technomento Commodity Report. You can get that absolutely free, test drive it for 30 days. The way you do it, go to TFNN, go to newsletters on the top banner, go to trading newsletters. You see the Technomento Commodity Report right there. You can test drive it absolutely free. Andy Hecht, what's going on?
Happy holidays, Merry Christmas. How are you?
Happy Hanukkah. It's a beautiful thing.
Thank you. I see we're both men in black today.
It's a beautiful thing, man. Totally.
So listen, I got a chart up here. I have a very long-term chart up here.
Hey, we do look like twins. How's that?
We do, right? You like that?
Yeah, I do.
Maybe I'll get the soul patch going.
There you go. Totally.
I have a long-term chart up here of the dollar.
Okay.
And as you mentioned, we broke up today. We're at the highest level since March 2006, and it looks like we're chasing that key resistance level up at 92.53 on the index in 2005. Very impressive move, huh?
Isn't that amazing? 2005. I mean, it's 2000. It's going to be 2015.
I know. It's amazing. It's amazing. And listen, think about any foreign money that came in to buy U.S. stocks this year. Wow, what a year.
That's a fact, man. Big money just on the currency. Yeah.
Oh, on the currency and on the stock, you know. I mean,
yeah.
we Dow closed
both
above
sides.
18,000.
Both sides.
First time they got it both sides.
Yeah, no doubt. No doubt.
Amazing. So this higher dollar, you know, you got the dollar.
Yeah.
You got the deflation scares internationally with the weakness in China. Iron ore made a new low since 2009 today, down at $66 per dry short ton.
Okay.
So dollar strength, deflation scares equals declines in commodities.
Yeah.
That's what we're seeing. So interesting. I think gold held up pretty well. Gold only down $5 today with the dollar cracking through the 90 level. We'll see how it does tomorrow. Very little volume out there. Holiday trading. I heard in the last hour you and Basil talking about a stock that I wanted to come back to, if you don't mind.
Okay.
Which is North American Tankers.
Yeah. Right.
And you know, I've had a lot of stuff written on put up for the end of the year. I'm almost done with Seeking Alpha this year, but
okay.
I had an article on what I think is the best professional commodity trade for 2015, and that's basically buying physical oil, storing it, and selling it forward on the exchange.
Yeah.
And that's the reason, Tom, that North American Tanker is doing very well.
Right.
Because they're filling these tankers, because not only are they tankers to move oil, they're also tankers to store oil.
So, hey, let me ask you this. So, forward oil right now is going for how much?
Well, pick a time. 2007, let's say January 2017.
Okay.
$66.31 a barrel.
Oh, that's not that much more, though. That's interesting. Okay, so...
$9.
Well, I guess so. The way that you do that calculation is that you got to get these. Let's say if you
2 years. All right, 2 years.
See.
So 2 years, it's about just under 16%, 8% a year.
Right.
We both know interest rates are far lower than that.
Zero. Just about.
Right.
Yeah, they can get it. The oil companies, the people that were doing it, folks, can get it for nothing. That's what it really comes down to.
And the Chinese.
Yeah, the Chinese. And so then the key is, though, what the tanker cost is, right?
Right, what the daily, and I can guarantee you that there is a 100% positive correlation between the width of the contango, or the premium on forward oil, and daily tanker storage rates.
No, I know. It's just dynamite. I know. I like that trade. I love how you put that together. That's really cool. Yeah.
So, you know, in the oil market, the whole sector got toasted and roasted, as you like to say. You know, this little sector, this transportation sector, ain't doing so bad. And looks like it'll probably do well into 2015.
Yeah, well, no, we'll see whether they can get real juice behind it. There's no doubt that, you know, it's amazing. It's amazing that sector stayed alive. I mean, it got killed, like really killed. I mean, you know,
the tankers? Oh, yeah. Oh, yeah. Hey, when oil was in backwardation, it was terrible.
Yeah.
Terrible. Right. You know, exactly the converse of what we're seeing now. But that's coming back to life. Be careful, though, because any shipping stock is not a good stock necessarily. Because if you're shipping bulk and you're shipping iron ore, it's not good.
Yeah, no, there's no doubt.
It's ugly. That's an ugly one. Now, let's talk about a commodity that I personally got toasted and roasted in this week, which is natural gas, which I should have listened to you. You did call it. You said that it could go down to 310. And, Tom, the low today, 309.80.
I know. It's a bummer. Right.
Well, not a bummer. This is what I'm doing. I bought scale down.
Okay.
And quite frankly, instead of putting a dollar stop on it, which I know is prudent, but I've been a natural gas trader for a long time.
Yeah.
I've learned that you put a dollar stop on, you are guaranteeing yourself to get stopped out. So what I am doing instead is I am putting a time stop on it. And my time stop is Valentine's Day. So either on Valentine's Day, natural gas is going to give me some lovin', or it's going to be a repeat of the St. Valentine's Day massacre. So what I'm thinking here is, look, last winter, it's warm in New York, it's warm in Boston, it's temperate in Chicago, they're wearing shorts in Anchorage. The winter started 2 days ago. To think we're not going to get cold snaps is a little bit much. The hedge funds, they're 74% out of natural gas longs here. They're basically out of that market. There's not a lot of long positions in that market. I'm comfortable being long it here. The chart is riddled with gaps. And you know what? Last year in late January, that's when it started to rally. It peaked in February. That's why I'm giving it a February 14th stop. Basically, I think the damage has been done.
Yeah, it's going to be... So you're dealing with... You know, one of the problems I just see with this thing right now, just on a technical deal, is that it's like, man, you know, when we look at 2009, excuse me, the low there was 240, and there's good juice there, okay? But we're into that bar, you know, by the top of the bar is 490, so it's like, man, you can't use that bar because it can go to the bottom. Now, we're right at the bar from January of 2012, so it's like, this is a tough one, man.
It's a tough one. Listen, I could see it going to 240 in the next 2 weeks and then going to $6. So you know what? I think, listen, I've always said this. There's very few commodities that I'll trade like I trade natural gas. It's a commodity. Most people should stay away from it. You have to have nerves of steel. You have to have a very strong stomach for this commodity. But this commodity trades very often, Tom, at 100% historical volatility. And
oh, yeah, listen, man,
it's very par for the course in this commodity.
I love trading it. There's no doubt.
Asymmetric possibilities. And I like that it's been crushed this far.
Andy, stay right there, all right?
Sure.
Awesome. Sure. This is Andy Heck, Tom O'Brien. You stay right there, folks. Andy and I are going to be coming back. We're going to be talking some crude oil. We'll get maybe that live cattle, because Andy was talking about inflation, deflation. See, I think inflation's there, and it's in food in a big way. We'll be right back.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And don't forget, folks, Andy has an outstanding show every Tuesday, Thursday, right here at TFNN. Broadcast 5 to 6 Eastern Standard Time. Also has a great newsletter. The way you get it, go to TFNN, newsletters, trading newsletters. You see the Technomental Commodity Report right there. You know, Andy, let's talk deflation, inflation, right?
Okay.
So last night, and, you know, because of, you know, the holidays, right? I mean, I like to eat anyway, okay?
Oh, I've seen that.
So what happens, and I cook a lot too, folks, okay? So I'm shopping, and I'm saying to myself, man, food is so expensive. It's blowing my mind, right? But now watch what's going on in my head. I remember when I got into the gold market, right? And gold was $282 then. And every single time that I would go to the market, right, I would say, oh, man, like, why am I going to buy that when I can go buy like 1/10 of an ounce of gold or 1/2 an ounce of gold, right? Mm-hmm. And so I correlated everything with that gold market, right? And then, you know, even when I went up $300 and was $400, but at those levels there, $300 or $400, it was really easy to correlate and everything, right? So between shopping for presents and eating and buying stuff, I'm starting to correlate this to me buying, you know, I buy a lot of houses, right? And I'm saying, man, hold it, this thing is whacked out. And what I'm talking about, folks, is this. This isn't going to be a trip now. So I'm going to get my head really wrapped around this because the next few days, we have a full day Friday, but I'll have more time around these holidays to really get it down to a numbers deal. And what it is, Andy, is this. So check this out. When I'm thinking that you can go do a shopping order, and let's say a normal shopping order is going to cost you $200, $250 or something, right? Mm-hmm. And how long it lasts and what you're getting versus what, now this is not across the country, but it would be where you live in Las Vegas, we are in Florida. And what you can buy a house for, say to myself, hold it, something's whacked out here, man. You know, And specifically what I'm saying is that I think the inflation is already in food like beyond belief. Like, and if it jumps somewhere else, we're all going to be in for a shock. You know?
Yes, I do think that food, well, let's separate it. Certainly is in terms of protein.
Yeah, no, that's a fact, right? It's not, I don't eat grains, so that's right.
Well, in terms of grains, Tom, you know, that really started the cascade, but that's a weather issue. And we're not really, you know, we're seeing corn, which was $8 a bushel at $4 a bushel. We're seeing wheat, which was $9 a bushel at $6 a bushel. Soybeans, 18 or 10. Okay, so it's not really there, but it certainly is in cattle.
Right.
You know, cattle, which was
and
80
vegetables.
cents.
And vegetables. You know, vegetables and fruits are expensive.
Absolutely.
Yeah.
But it's not just cattle. It's turkey and chicken. Very, very expensive, you know, compared to where it is. And seafood, also very expensive.
Oh, yeah, big time. Yeah.
I went to buy some lobster tails for Christmas Day.
Right.
And, man, very expensive. I mean, good ones at Costco, but you know what? Very, very expensive.
Right.
So, you know, look, cattle got up to $173 a pound on the live cattle contract, but we've come off. We're down to $160 a pound. This market needs a correction. I mean, you know, it's gone only up all year, and every dip has been a buy. So now we're around $160. Not a lot, but I hear what you're saying, and it depends certainly what you're buying.
It does. And listen, it's only at the very beginning, but it's got my antenna up right now, man, because I got the same feeling. And it was like the last 3 weeks I'm saying to myself, hold it, man. If I really start tracking how much I'm paying for food versus how much I'm paying for housing, the food cost is like a fortune.
Right.
You know,
but Tom, let's take it one step further. Let's talk about, you know, just money. And the amount of money that's been printed in the United States since 2009.
Right.
And then we go over to Europe and see how many euros they're going to have to print now to keep that place afloat, right?
Yes.
And what's happening to other currencies like the ruble, you know, there's exogenous factors there, but certainly other fiat currencies. You know, money, paper money is worth a lot less. So even though commodity prices have come down recently, there is a fine line between this deflationary scare and a potential for an inflationary explosion. There is a very fine line.
I know, and well, you know what's so cool, man, and this is why I think we got to keep because there's no doubt that, you know, the iron ore, the copper, you know, these things have come down dramatically, which are going to have, or they have had implications already. But then I started looking, I says, okay, hold it. You know, you need food every day. You need, you know, housing every day. You don't need clothes. And in fact, I was clothes shopping. I can't believe that some of these stores can sell clothes that are so inexpensive.
Right.
That blows my mind.
You know where there is inflation, in my opinion, right now? In the stock market.
Oh, yeah. No, that's
big time inflation.
Right.
I mean, that's just, you know, a herd of fiat money that's worth less chasing these companies.
Yeah, no, there's no doubt. I mean, that you can see that.
This stock market is fully priced here, Tom. I don't know. You know, listen, I've been bearish for a while and I've been wrong, but you know.
You've been bearish. I don't have any nails left.
Coming into 2015, I mean, what are they going to put up? 19,000, 20,000, you know.
Well, you got to remember something that, and folks, when in the market in general, when you have a blow off, if you remember, the NASDAQ went up 30% in 6 weeks in 1999. Last 6 weeks, 30%. 30%.
It can last a long time.
That was sick
before it corrects.
That was sick.
Absolutely.
Yeah. I think the biotech started it today. We'll see.
We'll see.
I'm
not expecting much until 2015. I think right now it's all fund managers pushing for valuation and everyone else enjoying the holidays.
Yeah, no doubt. Tommy likes to come out and visit you.
Well, it's usually a mellow time this time of year. It gears up again around December 30th.
Yeah, no, that would make sense. Tommy, we were at the Hard Rock last the New Year's Eve. It was great.
The one in Florida.
Yeah.
Oh, it's always fun.
Yeah, it is.
always fun. There's entertainment, and it's always fun. But listen, it's going to be interesting to watch. You know, a lot of these commodity prices have come down really far, as you've said, this year. Things like iron ore, coal, orange juice, grains. I can go on and on with what's come down this year. However, we're going into 2015. It's a different world in the new year, and quite frankly, there's a lot of turmoil in the world.
Oh, man. That's a fact.
It's going to be I think keep your eyes on wheat, because that could be very interesting come the new year, Tom, because the Russians might decide not to export any wheat. And they do produce the marginal bushel there in Ukraine and in Russia.
And you know what'd be really cool?
Seen that bubbling.
Yeah, it'd be really cool, man, is that you never know that might be the one time, because I figure the Congress and the Senate are going to have a huge battle about opening up Cuba, which they shouldn't. I think that's insane, folks, okay? But the bottom line is that they're going to have this battle.
That's politics.
That's politics. But what very well could happen is that the farmers out in the Midwest might just put the hammer down on all of them and say, hey, open this wheat market up for us, man.
Right? It's so cheap to ship wheat from the U.S.
Oh,
and
totally.
by the way, Cuba, we have a deficit in cattle.
Right.
Cuba raises a lot of cattle.
Oh, isn't that cool?
Yes. Very interesting bilateral trade. You know, I wrote an article about Cuba and grains in Seeking Alpha this week.
Okay.
And one of the people said to me, you know, what are they going to pay for the wheat with? And my answer, cows.
Yeah. Oh, no, totally. Yeah. And then this deal's going to happen quicker than people realize, man. I mean, you know, Cuba's right next to us. And
it makes sense for both parties. Politics aside, makes sense for both parties.
Oh yeah.
From a business point of view, and also from a personal point of view for people who still have family there and stuff.
Hey, you know, blows my mind. I cannot even understand the argument. You know, 33,000 kids died in Vietnam. We have business with them. China, Russia, we deal with all these people. It's like, well, how the heck did this happen, right?
I think, Tom, that probably this has been done as a political thing. Remember, Cuba's best friend in the world has been Russia for 50-plus years. And, Russia's under siege, sanctions and all kinds of things. And going back to oil here, the Saudis are holding firm. And they're going to keep pumping that oil because you know what? They're competing for market share, not with the shale, Tom. They're competing with the Russians. The Russians were larger exporters of crude last year.
Well, you know, I told you about the geologist I know. And this guy, folks, is really successful. In fact, he worked for the Saudis for a long time. He's a young kid, right? And he sent me an email last week, and he says, Tom, please have the Saudis turn off the spigot.
They're not going to do it.
No, it's serious business for them, too. I mean,
it's all about market share, and market share equals control.
It does. Hey, listen, man, we look forward to the show. 15 minutes.
Great. Merry Christmas,
Merry
Tom.
Christmas, man.
Enjoy.
Have a great one.
Take care.
You stay right there, folks. Andy's going to be coming up 15 minutes. We'll be growling and prowling with you for the next hour. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Let's go overseas. Particularly, we're going to start in Shanghai. Shanghai last night came off the high, down 3%, had juice behind the move, too. Was kind of interesting because Shanghai is something that you're going to want to wrap your head around on a correction. So we came down $94 last night in Shanghai. Now, if I bring this back, and I'm going to put this on a much larger basis, what you're going to see in Shanghai is this. Shanghai, the highs in 2007 was 6,100. It crashed. It went to 1,600. You did the first counter trend bounce, and that counter trend bounce in Shanghai was way before us. That came right off the bottom and got up to 3,400. Then crashed again. It went down into 1900. Now what Shanghai has done is this. Shanghai is pushing on your swing highs of 3,400. We hit 3189. You're going to back down now, and I suspect the back down is going to get you probably to, let me see, I'll put this in a weekly first. Because it looks to me, and you can get in the ETF market on this, but it looks to me like Shanghai number one is off the bottom, and anywhere around 2,600, 26 to 2,400 would be the number. And what's going to get interesting here is that, okay, Shanghai wants higher price because if you want to see the correlation, how you're pushing it into a swing, the swing point from 2009 had 407 billion shares. They do billions like nothing over there. Well, this month thus far, we've already done 885 billion shares. So once Shanghai gets by 3478, oh man, this thing can rocket because see, it was a parabolic move on the way up and on the way down. You get over that, we've been building that base out there since 2009. So that's an intriguing market that you can get into pretty easily. We go over to the FTSE next. We take a look. Well, actually, let's look at the Nikkei because the Nikkei also is an equity market that, bottom line, because of the yen, meaning the weakness in the yen, it's not a bad, it's a good setup. And the yen right now, I mean, the Nikkei itself, you're at 17,600, anything around 13,900. Now, we go to the FTSE in the UK, different ball game. FTSE in the UK came down to the October 15th swing point, had juice when it come down there. That means it's going to be back down there. We're at 6,500, and that's 6,000 that it's going to make a run back once again. The DAX in Germany will be interesting here to see tomorrow how the DAX in Germany trades. The reason being, the DAX loves trading like the NASDAQ, our own NASDAQ. The DAX is at highs right now. It's at 99.22. The high is at 10,050. What you do have is that when we did come down in October, that's sticking out like a sore thumb, that high volume spike on the way down into 8,300. So we'll see how we handle that. But that's in the short term. The longer term, DAX is running for 8,100, which is 1,900 bucks off where we are, which is approximately a 19% correction. So there's going to be some big volatility coming in this market, staying in this market in 2015. If we go over to the euro, because King Dollar, no doubt, has been on a tear. The euro has been getting toasted and roasted. We bring the euro back for a 10-year basis. I actually got to bring it back 15 years. So right now we're going after 118. It's going to be a big number, man. You break 118 in the euro, and the dollar's going to go to the moon. Because as soon as we break that, this euro can go to $92. 92. Ooh, that's intense. We're all going to be going to Europe. Get ready, folks. You can go to the Amalfi Coast. If you've never been to the Amalfi Coast, Italy, it's gorgeous. Amalfi Coast is absolutely insane. No two ways about that. We go take a look at the Big Blue. Let's go to Big Blue, because Big Blue, I suspect, is going to be running a bit higher, and it's going to be ready to be sold at 166. Right now you're at 162.24. And what we have here is that Big Blue broke apart on the dailies, on the weeklies, on the monthlies, all of the above, and Big Blue is running for 116. That's going to be a big problem for the Dow Industrials, that is. And Big Blue is going to be a classic, meaning how you're at highs, dramatically lighter volume. You come off the highs with volume. We did it twice. It was subtle. The first one was pretty subtle. That was October of 2013. You came down with 131 million shares. It goes to 172, bounces back up to 199. The second one was not subtle. The second one that got taken apart. It went down $29 with 146 million shares. That's volume off the high. And volume off the high sets up a huge problem because technically it sets up a larger correction. Fundamentally what that is that that's a large fund that's getting out of the equity, and they're not there to buy it back to support it on the way down. That's kind of how that thing shakes out. Apple. Let's go to Apple because you get the holidays, you get Christmas, you get all of the above. Apple right now is at 112.54. Hasn't been able to get the juice. It's not that it's got hit either. But Apple, when Apple turns, Apple's going to be a bad little scene because we're at highs with 820 million shares, and you should be banging out like 3.4 billion. Never mind 820 million. It's a large number. Don't forget, folks, at TFNN, we broadcast every trading day. Live content, 8 o'clock in the morning to 6 in the evening. Our man, Mr. John Logan, kicks us off. Then we get, of course, Steve Rhodes, Basil Chapman, Darryl, Larry Pesavento, Dave White, myself, Andy Hecht. All of us, we're out here growling and prowling. We get Chad Coco, TD Ameritrade, Nico and Paige, keeping you healthy. You can get all that programming right on your cell phone, tfnn.mobi for the audio. If you'd like to get the Tiger TV, just go to tfnn.com. You hit the TV on the top right-hand side. You'll get the audio, plus you get the video. And, of course, if you happen to be in your car and you miss a part of it, all of that programming is archived. You can get all of that programming 24 hours a day. If you do enjoy the programming, folks, please tell 3 people. We do appreciate you passing that word along as you have in these last, my God, we're running on, I think I'm going to be running on 20 years this year. That doesn't make any sense. I'm not even 20 years old yet, man. How does this work? I don't get it. Time, baby. Time flies. Yesterday's gone. Tomorrow's not here. What are you doing right now? Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right here tomorrow. You stay right there. Our man, Mr. Andy Hecht, is coming up next. Go get him, folks.